Have you ever left an ice cube out on the counter thinking, it'll be fine, only to come back and find a sad little puddle? Well, that's what's happening to your cash right now. Every second you're holding on to money, it's slowly melting away, losing value. Today we're breaking down why keeping cash might be one of the worst financial moves you can make, and what can you do instead to keep your wealth from evaporating. Welcome back to Pod X, Tony here. Today is 27th of February 2025. Let's take a look at today's market update. Bitcoin is currently trading at $85,000. As of now, we're experiencing a pullback of approximately 20% from its all-time high. This correction, while notable, remains within healthy market dynamics. The RSI on the daily chart is now at an oversold zone. We have last observed in August 2024 when Bitcoin was priced at $49,000. What we also need to look out for is that during this downturn, Bitcoin's dominance hasn't spiked as it typically does. It might be suggesting a potential altcoin season is on the horizon. And in the last 24 hours, over 1.6 billion Bitcoin's position has been liquidated. We can see that greed is still everywhere. Especially this is followed by the significant liquidation event on the 3rd of February 2025. Now let's get into today's morning deep dive. In year 2000, you could buy a trolley full of grocery for $100. Fast forward to today in 2025. And that same $100 might only get you your essential items. This isn't just price hikes. It's a silent theft known as inflation, eroding your money's purchasing power. Inflation measures how prices for goods and services increase over time. Even in stable economies, a steady inflation rate means that cash loses value gradually. For instance, $100 in year 2000 is equivalent to about $180 today, purely due to inflation. History offers more dynamic examples. In 1920s Germany, hyperinflation was so severe that people needed wheelbarrows of cash to buy a loaf of bread. Money lost value so quickly that workers demanded to be paid multiple times a day. More recently, Venezuela experienced such extreme inflation that the currency became almost worthless, leading citizens to use foreign currencies or even barter for basic needs. And in just about 2 years ago, the US saw inflation rate reaching a 40-year high, significantly impacting savings and purchasing power. Everyday items become so much more expensive, and those with cash savings found their money couldn't stretch as far as before. Central banks plays a critical role in this by controlling the money supplies and interest rates. They aim to keep the economy stable. However, actions like printing more money can inadvertently lead to inflation, reducing the value of cash. It is a delicate balance between stimulating growth and preserving currency's value. So what can you do to protect your wealth? Well, investing in assets that typically outpace inflation is one strategy. Stocks, real estate, and commodities like gold have historically provided returns that keep ahead of inflation. Cryptocurrencies such as Bitcoin has also emerged as a potential hedge against currency devaluation, though they come with their own set of risk and volatility. Say a person who kept $1,000 in a saving account for 20 years. With low interest rates and inflation, the money's real value decreased over time. In contrast, another person who invested $1,000 in a diversified portfolio of stock might saw their return growth outpacing inflation and increasing in real value. The psychological impact of cash losing value cannot be ignored. In a lot of cases, it leads to anxiety about the future and a sense of helplessness as savings diminish. Planning and proactive financial management becomes essential to maintain financial securities. Looking ahead, the future of cash is quite uncertain, really. With the rise of digital currency and a move toward cashless society, physical money might become less prevalent. However, the fundamental issue remains, ensuring that whatever form our money takes, it retains its value over time. So while having some cash offers liquidity and safety, it is essential to recognize its vulnerability. Diversifying your asset and staying informed can help you protect your wealth from the silent erosion of inflation. Now let us take a look at today's top news. The first news, on-chain data shows that the Bitcoin market value to realized value ratio is still below previous cycle tops. Historically, when this MVRV is at these levels, it indicates that Bitcoin is not yet in its full-blown speculative mania phase. Analysts suggest that despite the current pullback, Bitcoin could still have a significant upside potential in this cycle. However, some short-term volatility might still be in the play. The second news, once again, it's about SEC again. It's dropping more investigation. The SEC has now officially closed its investigation into Gemini Earn, a product that came under the scrutiny after Genesis, a partner firm, declared bankruptcy. The SEC's decision not to pursue enforcement action is seen as a win for Gemini and brought the signal the regulatory scrutiny over crypto lending may be easing. However, the industry remained cautious as new regulation around stablecoin and staking could be introduced later this year. A third news: a few days ago we covered that the Bybit security breach, and new details have emerged. The exchange has now confirmed that the attack was conducted by compromising a safe wallet developer machine, which affected an account operated by Bybit, leading to the theft of billions of dollars in digital asset. The forensic team has determined that this breach occurred due to a vulnerability in the wallet system, allowing unauthorized access and fund theft. Although Bybit has promised to cover all users' losses, this event has once again highlighted the risk associated with keeping funds on centralized exchange. With an event like the FTX collapse still fresh in our mind, it is a strong reminder of the importance of self-custody solutions for securing your crypto. That's a wrap for today's video. Please subscribe for daily updates in weekdays so we can all grow together. Stay invested, and I'll see you tomorrow.